What is up, guys? Hope you guys have had a wonderful night. Sorry about the third eye. My dog decided to bite me in my face. But it's okay. It's not an issue, it happens. This is what happens when you have pit bulls. Um, let's get directly into it. So, last night I did a video for you guys on setups that I saw. I'm not going to go over it on this video, but all of them hit TP. We did over 200 pips last night, and I want to show you how easy it was. Alright, so I want to show you why I saw what I saw and how I got the entries. And I'm going to show you how to properly plot zones. Alright, so this is the first video of the playlist that I have for Forex Basics 101. Alright, again guys, subscribe, share, comment, tell a friend, join the Signals chat, it's for free. Free Signals chat, always will be free. Ask me if you have any questions. If you guys want to learn a little bit more, message me directly and we'll work something out. And let's get directly to it. Hope you guys enjoy the video. Welcome to Lone Wolf Trinity FX Trading YouTube page. Okay, I'll work on that a little bit better next time. So let's get directly into it so you guys can see what I'm seeing. All right, so I'm gonna start from fresh. Let's talk about zones. So let me use let's use AU. AU is fine by me. All right, so we're just gonna talk about zones real quick so you guys can understand what I mean by this. So you have support resistance, so then you have supply and demand zones. Okay. Once you first start trading, you basically talk about support resistance. So support resistance is a line, it touched it, it rejects it. Now, once you get better at trading and you understand supply and demand. That it goes like this. That it goes within the supply and demand zone. It doesn't necessarily just bounce off. And that is where people get lost, and that's where people get wrong entries or get stopped out, or just they don't have a good foundation of it. Understand support resistance, supply and demand. Basically one and the same thing, but supply and demand is a more grandiose scale because we're doing it on higher time frames only, daily and weekly. Maybe H4 the lowest time frame you'll use for a proper supply and demand zone. Okay, these are called supply and demand zones because these are areas in the market where price is liquidated. So buyers or sellers into the market at these price points to get people's stop losses hit or to induce buys or to induce sellers. Okay, the reason why we want to know where these zones are at, because once we know where these zones are at, we have an idea where price is going to bounce off. Alright, so price is just a big consolidation. That's all price is. Price is just a massive consolidation within smaller zones. That's all price is. It's just a massive consolidation within zones, within zones, within zone, within zone, within zones. So once you understand where proper zones are at, you have an idea what price is going to go towards. So you have an idea where your TPs are. You have your idea where your entries are. You have an idea where your stop losses are. Zones tell you a lot of things. All right? So we're going to straight directly to it. When I look at AU right now, I draw where price is relative. I'm just going to teach you how I draw zones. Alright? I draw zones where price is relative. So, relative to me would be this high. And relative to me would be about this low. That's relative price points in it. Okay? That is relative price point. This is where price is currently at. Okay? This is what I see. Everything else besides this is not necessarily relative. For example, people could say that this is a zone. That's fine. It is a zone. It is a strong zone. Zones have to be both support and resistance. So it was a low, turned high, turned low, turned high, turned low. This was a low, turned high, turned high, turned low, turned high, turned low, turned low, turned low. So again, support equals low, resistance equals high. In price, you have resistance and support. when it comes to structure, you have highs and lows. I'll make another video on what this is, but this is the basis of it. All right, so again, in price, you have resistance and support. When it comes to structure, you have highs and lows, but they're one and the same. So when we talk about structure, we're not looking at price, we're looking at highs and lows. If price is creating higher highs and higher lows. When it comes to price, we don't talk about highs and lows. We're talking about price points. If a price is higher than the previous resistance or lower than the previous resistance, or vice versa of support. Okay? So these are the zones that I'm looking at. The reason why I'm looking at these zones, because this is an area of indecision where price was at. And if we drag across, we can see that the wicks were at that point. It's really supposed to be a little bit higher. About this area is really the area that you should have it at. The reason why I say that, you want to touch as much as possible. You want to touch as much wicks and as much body as possible. That's what you want to have. You want to touch as much wicks and body as possible throughout the whole entire thing. Alright? That's how you have proper zones. Those are indecision levels. If it's just touching resistance, then it's a resistance. That does not mean that once price breaks, it's going to come back down and respect it. No, it has to touch both. It has to be both resistance and support. If it's both resistance and support, then it's a strong area in the market where we know that price might bounce to and reject off of, which is the name of the game. This is all what trading is. It's finding strong areas in the market where we like and to execute off of them. So now if I go to daily, we see the zones right there, you know? And then a lot of people use zones like this. Like they'll draw a zone here, draw a zone here. No, those are not zones, guys. Those are just support resistance. Zones cannot be broken so easily by price. You see how price is broken here, here, here. Like, that's not a zone. You want the zone to be respected, like not easily broken by price. You know, you want it at the highs and you want it at the lows of the market. That's what a proper zone is. At the highs and at the lows of the market. So this is a high point. This is a low point. This is why I say this has to be a little bit further up. So then you have the high point of the market, then you have the low point of the market, then you have the low point of the market, then you have the extreme low point of the market. Understand these are all, they're not one and the same. They're like different lows and different supports, but this is a low, this is high, right? And then this is a low and then this is high on this consolidation point. You have to be cognizant of that. So now understanding proper zones, we know where price is going to go towards. So now we're at this zone in the market, okay? We're at this zone in the market. So to show you how I would trade this zone in the market would be like this. I need to see a clear bullish candle for me to enter this trade. If I do not see a clear bullish candle for me to enter this trade, then I will not enter the trade for a buy. You know? Or if it breaks through it, then I wait for a retest to then sell it. You know, that's how proper zones are plotted. Okay? So now, when I said how does this work to identify TPs? Pretty simple. Zones typically always line up with support resistance, strong structure points. So this is TP. This is really TP1, right about here if it's a sell. TP2, TP3, and then this is TP4. You want structure points. So you want here, here, here. You know? That's what you want. So now if you're going to buy this, let's say you would buy it, where would your stop loss be? Below the structure point, below the zone, 10 to 15 pips. That would be. So you give it some breathing room. Because again, price, when it comes to zones, likes to bounce within them. Price likes to bounce within them. That's what price likes to do when it comes to these zones. Okay? Understand that. Alright, so that's AU. Let's take a look at GU. Let's take a look at NJ. NJ is a little bit easier. We're actually on NJ sells right now. So, what's going on with NJ? So we have a few things going on with NJ. We have this trend line being formed. That's why I rejected it. And then you had a massive bearish candle. So now we know that this is going to be sells towards the downside. 100%. This is going to be long-term swing sells. Long-term sells towards the downside. maybe even 61.8 to touch this area. Reason why I chose that area, look where it's at. This is a proper zone in the market. It is. It's a low, turned low, turned high, turned high, turned high, turned low. There's a reason why this candle stopped here. This wick could have been lower, but it didn't. It respected it. So I see price coming back down, touching this, and then shooting towards the top side. And then when it comes to a top side zone, again, you want both support and resistance. That's the next zone that we're looking at. Indecision level, support and resistance. Okay? So, again, the reason why you want zones in the market rather than support resistance, you can find support resistance in any time frame. Like if I go to H1, okay, let's look for some support resistance. This is resistance, this is support, this is support. You know? That does not mean that this holds the same value as that. It does not hold the same value as it. For example, this support holds more strength than this support. That's for a fact. This support holds more strength than this support. Again, that is for a fact. That is for a fact. But besides that, they're just completely separate things. Support resistance are not one and the same. You have to understand support resistance and supply demands, they're not one and the same. They're different. Supply and demands are higher time frames, liquidity zones in the market where price is going to bounce towards and reject off of. A lot of people just trade zones. For example, if in a daily zone, you're going to have H4 zones. For example, the way I do it too, so you have those big zones, and then you also have like minor zones. You know, for me, this is a minor zone down here. So, very simple. What am I trading? I'm trading from up here to down here. If this reaches all the way down here, what am I going to do? I'm going to buy it. If it shows me a bullish candle. Always if it shows me a bullish candle. I don't think, I'm pretty sure it's going to break it. It's going to break it because of just price action, understanding price action, and really understanding this last candle right here. This candle engulfed the body. It didn't engulf the wick, but it did engulf the body. So this is going to push down. It's about here. And then at this point, I'm looking for a buy to shoot pads up. Alright guys, so that's pretty much it. It's 2 videos. I can only do 15-minute videos. If anything, I'll make another video. Let me know what you guys think of this video, if it explained it a little bit better. I'll make another video. Again, this is the first video I'm doing. You guys wanted zones, so I'm doing zones. But this is only the first video I'm doing. I'm going to be doing a lot of these videos. A lot of zone videos. A lot of zone videos. Actually, let's take a poll. What do you guys want next? You guys want fibs, price action, numbers theory, quarters theory, EMAs, candlestick analysis, candlestick patterns, trend lines? What exactly do you guys want next? And I'll make it. Again, this is under the playlist. It's going to be under the YouTube channel playlist Forex Basics. Nothing advanced about this. This is all basic stuff. I'll go into more detail later. Alright, but I'm going to start this off here. Hope you guys enjoyed it. Bye.